What's going on, traders? It's your boy Matt, back at it again with another video. And in this particular video, we're just going to talk about some of the market indicators that I personally use and how I use them and how they factor into making a decision when it comes to executing a particular trade. Now, we all know that market indicators are lagging indicators. What that means is that they actually happen after the fact, and this is true to most market indicators. So that would mean that once the price action actually happened, so the price action happened, and then it would show you on the market indicator, right? It doesn't show you on the market indicator first, and then the price action happens. It's the other way around. The price action is first, and then the market indicator. So if you're one of those people who actually use that market indicator to judge what the price action is going to be for the foreseeable future, then you're actually using that market indicator wrong. What you should be doing is that using that market indicator to kind of give you an idea of which way the wind is blowing, right? It's not per se, okay, you know, VWAP did this, then the price should be at 12 or anything like that. It's more like, okay, who's in play here? Is it the buyers out buying the sellers, or is it the sellers out selling the buyers? You know, that's the idea of what a market indicator is. And you also don't want to make it too complicated for yourself that you're using all of these sorts of crazy market indicators. I mean, I see people just using, you know, just only market indicators to trade, which is fucking crazy, right? But anyway, so one of the most popular market indicator is VWAP. So let's just go right ahead and discuss what a VWAP is. So if you click on here and click on VWAP, so what a VWAP is, it's a volume weighted average price, right? It's a volume weighted average price. What that means is that it considers the volume and the price in a given time, and that given time could be, you know, market hours or one trading day, which includes pre-market and post-market, or a year. So within that given frame of time, it considers the volume and the price to give you that average price of what a single person paid for it, right? So let's say, for example, you know, 5 people buy a particular stock at $5, and 5 people buy the same stock at $10. Now, what's the average price of that particular stock? Would be $7.50, because you have 5 people who paid for it at $5, and you have 5 people who paid for it at $10, and you have 10 people who bought it, and each person averagely paid for it $7.50. That's what a VWAP is. Obviously, it's a little bit more complicated than that, but that's what the general idea is. This is the setting for VWAP. You have the upper band and lower band. I personally don't use those. I personally just focus on the middle one, the actual, you know, the real VWAP price. And basically, how I use VWAP when it comes to executing a trade is, the way I think about it is, so now we establish the average price that is being paid for that particular stock in that given time, which in this case is, for this trading day, is, let's say it's at 12.50, right? It's at 12.50. Now, when the price is above 12.50, right? If it's above 12.50, what it means is that the average buyer, right? The average buyer is in the fucking money. So they're actually making money. So the average buyer is actually in the money. So now you got to think about that when you making a decision. If you're a short seller, you know, if this thing is holding up above VWAP, which means most buyers are in the money, well, the average is in the money, which means, are they in a hurry to sell? Would the price fall further? Or those are the things that you got to consider. Now, when the price is below VWAP, that would mean that the average buyer is underwater, so they're losing money. And when people are losing money in the stock market or in trading, what happens is, either they want to get the fuck out as soon as possible for whatever loss, or they want to minimize they want to get out for the, you know, for as minimal loss as possible. So that's when you see the price action kind of deteriorating and go further down, right? But that's not to say, if you're a person who bought it here, for example, at $10, right? If you're a person who bought it here at $10, just because the VWAP, the price action is below VWAP, it doesn't mean you're losing money. It just means the average price, because it would mean just that a lot more people bought it up here above the VWAP. So when the price goes in, majority of the people are underwater. That's exactly what it means. So for me, as a short seller, I am more comfortable shorting stocks that actually are below VWAP, right, or struggling to break VWAP. What that means is that the price action would come in, so people will be in negative, and it comes in, it goes above VWAP, and the average buyer now is break even. And when someone is, let's say, they're down $1,000 in their position, and suddenly they break even, they want to get the fuck out. They don't want to hold and see what happens because they already experienced the pain, right? So that's what a VWAP is. Now the next indicator. Now for me, as I said, the way I factor this is it sort of gives me who's in play, who's in control of the market, right? If it's below VWAP, then the sellers or the short sellers are in control of this thing. If this is below VWAP, struggling to break up, it would mean that the sellers are in control, which means there's a lot of supply than demand. There's a lot of, people trying to sell down, people trying to buy. So it's pure supply and demand math here, right? And if the price is above VWAP, then it would mean that there's buyers supporting it. It's keep holding above VWAP, which means the average buyer who bought this stock is in the money. So they're not, when people are in the money, they're not as quickly to sell as when they're down in their position, right? So that's one of the other factors. So that's what goes on. Obviously, there's other factors that contribute, right? If something is going parabolic and stuff like that, but those were other discussions. But this is the general idea of what a VWAP is. Now, the next market indicator that we will be discussing today is the moving average, right? Now, you have to understand there's several different kind of moving averages, right? The first one is simple weighted exponential moving average. So I personally use exponential EMA. The reason why I use that is because it factors in the current price more so it does in the previous prices, so that it's currently heavy, right, in the current price. So that's just my preference. I use the 9 EMA, the 20 EMA on intraday charts, which is the 1 minute chart. I use those, but on a yearly chart, I use the 200 EMA on a yearly chart. Sometimes I use the 50 as well, but I usually use that. But that is, as I said, that's not to tell you to buy or sell. That's just to kind of, oh, my cat is going crazy. Just give me a second. So that's just not, that's just not to tell you to buy at this particular price or sell at this particular price, but it's generally to show you, okay, which way is the market going? Are sellers selling heavily and this price is more likely to go down, or are buyers buying this thing and the price is highly to go up? And that, I mean, this is like part of the equation, right? It's not a one single answer. Obviously, catalysts matter, right? If it's a good news or bad news, hand in hand with the price being below VWAP, it's being sold heavily on the level 2, and time and sales print is printing all the red prints. So all those things factor into making a decision, right? And also if it's a previous resistance level, support level. So there's a lot that goes into it, but generally the market indicators that I personally use is the VWAP, which is volume weighted average price, and the EMAs, right? Exponential EMAs is what I use, right? So that's pretty much it. Thanks for watching. If there's any indicator that you guys want me to review or explain, just comment below. I'm pretty sure I'll get back to you. Pretty much, we'll definitely make a video about it, and we'll go from there. Thanks for watching, guys. Peace.